Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Max Cabasso, managing director on Nasdaq's market intelligence desk, for an update on technical levels to watch in the Nasdaq-100. We'll also take a look at first half 2023 performance as the index made quite the comeback considering its performance in 2022. Max, it's great to see you as always. Welcome back to Trade Talks. And what we've really seen over the past couple of weeks, a little bit more sideways consolidation instead of that straight up move.
Yeah, for sure. And we hit resistance as expected at the 15,000 level. It's actually 76% retracement level from the 21 high. So again, expected to hit some resistance there. And as you noted, it really has been that consolidation sideways move. We're not seeing any sharp pullbacks or again, the wild moves higher that kind of you worry about. So starting to see some consolidation here. Volatility is definitely starting to come in. So again, consolidating at these levels, then go another run at that 15,000 level to hopefully by the end of the year test new all-time highs.
Let's talk about first half performance, right, in the Nasdaq-100. The question everyone's asking, are we starting to see market breadth improve and a little bit less of that concentration where we're seeing the move?
Yeah, definitely starting to see it improve. You got more companies that are participating in the rally. First half for the NDX was the best first half we've ever seen, for the index. So again, we're starting to get that move validated by the breadth improving. Again, more corporates, starting to participate in that. Usually we see that off serious lows. And again, we tend to see other indexes start to perform better as well when that happens. In the back half of the year, but the NDX usually continues to lead throughout the year. But again, first half was the best one we've ever had.
Well, we have to think about index valuation, of course, right? Because once you see these multiples expand, you have to start to really crush earnings or give some good guidance.
Yeah, I mean, last earnings, I had a conversation with one of our companies yesterday actually about kind of a lot of the bad news already priced in. Micron came out and basically called the bottom for the chips. So. Now we're again seeing the multiples expand, and it's going to be time to essentially put up those numbers. When earnings really start to kick off in a few weeks in July. So again, you got to validate those earnings and the multiples that investors are paying. But again, they're starting to participate, and investors are willing to pay up again, thinking that the worst is behind us now.
Let's talk about flows and option sentiment, which is so interesting. We're not seeing a lot of protection buying out there. You would think with as cheap as it has been, that you might try to put some cheap protection on.
Yeah, there's just been less of a demand. I feel like there's been a lot of just decaying of assets. Anytime we kept calling for a recession. First it was a first quarter recession, second quarter, okay, now third quarter. And you're starting to see people just take that protection off because they're getting chewed up, putting it on, and paying up for it. You're starting to see the skew come in a bit. So, I think, about a month ago it was up 1.8 essentially versus, compared to a call. So, you're not seeing that demand as much as the market continues to come on. It's interesting, to see if that picks back up, as we get closer to earnings. We're kind of in this lull. We don't really have the Fed, as a worry right now. Obviously, they paused last meeting. Market's already pricing in one more cut, for the July meeting. So again, there's not as much in front that people are worried about, but that tends to be when things, start to happen. But again, there's less protection. People are less willing to pay up just because, again, vol has been crushed and, that protection has just been, a negative drag on performance.
Well, one of the narratives in the first half has been climbing this wall of worry, right? Yeah. Do you expect to see that in the second half? Because a lot of the risks out there still exist, and of course, valuation comes into question. So when you think a little bit longer term, what are you going to be focused on for the second half?
I think it's going to be what do companies come out and say in terms of that second half uptick. There was a lot of talk of first half expectations were pretty low. Last earnings report, you really saw companies kind of throw in the bad news and cut the guidance for the second half, where everybody has said, okay, it's going to be weak first half, the second half we're going to pick back up. That has started to come in. What are companies saying in this report? Are they going to now keep that bar, kind of low for the second half? Are they expecting a pickup? So again, it's really earnings focused now and company-specific earnings, and sector-specific versus, previously it was a lot more economic data and kind of Fed worry. It really has become more of a, company-specific narrative that, that I'm going to be looking at.
Right. Well, especially in the Nasdaq-100, we have so much exposure to what's happening in the semiconductor space.
Yep.
And we know what has happened, with those handful of stocks. The guidance that they've given and the macro environment's really going to impact. They're going to have to perform.
Yeah, for sure.
Justify.
Yeah, they have to. I mean, we saw obviously the huge rally off of the, I don't know if you call it AI hype train, I guess you could say, where we really saw a lot of really strong expectations get priced into stocks. Now, is that going to come to fruition, or was that, kind of a few years ago it was blockchain. You said blockchain and everything goes wild. You put AI in your, in your earnings print, we're going to be, see this huge boost from it. You can talk about it all you want, but the numbers are going to have to start to back up those proclamations. So that's definitely a big one to watch. It is this coming to fruition? Are the chips, is the boost actually going to be there in reality, or is that really a 5-10 year thing, or is that short term?
All right, Max, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.